Hello and welcome. Sean Allison here, ready to present this week's video regarding the market, our current trades, and where we're likely to make money this week as well. Thank you so much. Incredible feedback from many of my subscribers here on YouTube. I appreciate you all listening each week, and thank you so much for your feedback as well. I really appreciate that. Any feedback you'd like to give us on this video or any video, send an email to support@cashflowoptions, all one word, cashflowoptions with an s.com.au, and they will pass it on to me. Thank you so much for everyone who has done that. So Bitcoin mining is suddenly one of the most profitable businesses on the planet, and we are making some very good profits from Bitcoin mining stocks, and we will talk about that in one moment. But before we do, let's have a look at the overall market and what it is telling us. Well, in a snapshot, bullish. We are in bullish opening range again. We can see the first trading day of the month was right here. We've set the high and the low of the first trading day of the month. We've now broken above the upper line and we are in bullish opening range mode. If we look at our workspace, so we can look at the overall market with on one screen, we can see that everything is above their 21 EMA on a daily chart. So we've spoken about the S&P 500, bullish opening range. NASDAQ has now taken off again, well above that 16,000 level. We've had the economically sensitive Russell 2000, which has been in a trading range for months and months and months, that has now just broken out of that. So a little bit bullish there for the Russell as well. We've seen the transports have a big move now, potentially setting up with a bull flag pattern there, and the industrials are looking very strong as well. So pretty much everything at all-time highs, money flowing into the market as we speak, and we are coming into the end of the year, which seasonally would be a bullish time of year as well. If we narrow down into the sectors, we can see that all of the major sectors that we track are above their 21 EMAs on the daily chart, except for biotech, which just broke down on Friday, 3.36% to finish below the 21 EMA. But the two biggest sectors, technology, well above its 21 EMA, all-time highs, and also the financials sitting right on its 21 EMA, still very bullish. Consumer discretionary and staples doing very nicely as well. And retail, who has been in a sideways trading range, is now just starting to break out also. So in a word, bullish until it changes, right? The trend is your friend until it ends. So economic news this week, Jerome Powell will be speaking on Monday and Tuesday. We've got CPI or inflation coming out now before the market opens on Wednesday. Jobless claims, petroleum status report, and the Treasury statement will be on the Wednesday. And then on Friday, we've got consumer sentiment. So there is a couple of significant economic announcements, but not in a big way, right? So there's some of the things we need to be mindful of. So bullish in a nutshell. We know that can change very quickly, but we're going to trade what we see and not what we think. If we want to have a quick look here at the cryptocurrencies, let's have a look here. Bitcoin, just using the 21 EMA as a support level. Sean, why do you use the 21 EMA? Well, there's typically 21 trading days in a month, and it is a very reliable shorter term indicator on the daily chart between bullish and bearish. So using that 21 EMA as a support level right now with Bitcoin, sitting around 61, almost 62,000, did reach those highs of around 67,000, but sort of just going sideways, which is pretty normal after a move from say 40,500 to 67,000 in a very short period of time. So that's okay. Still looking okay there. If we look at Ethereum, very bullish above that 4,500 level. And Solana is another one that I like to look at as well. That's very bullish, breaking above even now $250. So the cryptocurrencies are looking strong, and although we haven't seen another breakout of Bitcoin, it does make sense that it is traveling a little sideways before then potentially moving up. I do believe by the end of the year it will be at all-time highs again. So anyway, that's what's happening there. Let's look at some of the trades that we have on. We spoke about Bitcoin being one of the most profitable businesses on planet Earth, and one of the trades that we are in, and you would have heard me talk about this, is CleanSpark. Now, with CleanSpark, we set up a covered call. So what we did is we bought the stock for $14.53, and we sold the out-of-the-money call at the $17.50 strike, which means that we were happy to sell the stock at $17.50 if the stock then appreciated and moved above that price, and we were paid day one for that. Now, if CleanSpark, CLSK being the ticker, does remain above 1750 come the 19th of November, then we will make a 26.6% return in 38 days. Not bad at all. Let's have a look at the chart here with CleanSpark, and you can see there, beautiful inverse head and shoulders that I found. Bitcoin was breaking out at the time. We got into this stock, and it had a beautiful move to the upside, trading at $20.48. So that looking like at this point to be a very successful trade for the month. Another trade that we had on was with Marathon Digital. What we then did, another Bitcoin mining stock, I do believe by the end of 2023 it'll be around $113, which is significantly higher than where it is now, obviously. So what we did is we just sold a cash secured put option. In other words, we were looking to buy the stock, but at a price that we choose, not the market. So what we did is we sold the 40 strike put option for the 19th of the 11th expiry for $1.83. And as you can see here with the chart, we have agreed to buy it. Probably actually here would be the one to do it, because I actually had some lines drawn on this one. There it is there. We've actually agreed to buy it all the way down here at $40. So obviously being up at $63.82, we are in profit already on that trade. So what I've said to the members is to close out the 40 strike put option, buy back now for around 8 cents. Okay, for every share you're controlling, and we can lock in $1.75 per contract, or $175 per contract, or a 4.4% return in 3 weeks. So we're going to do that now, lock in the profit, free up that money, and we'll put it into something else that can make us a bigger return from that point. I mean, you can only make another 8 cents. Why would you hold on to it? Just move on to something else and free up that money, because we have some new ideas that I'll show you in a moment. Riot was another Bitcoin mining stock that we got into, and looking for this to move to $75 come the end of 2023. So what we did is we sold a cash secured 25 strike put option for a 6.8% return. Let's have a look at Riot. We agreed to buy it down here at this support level of 25. It's sitting at 31.49, so well above that, and looking good. Looks like another profitable winning trade. Time will tell, but it's looking good. Now, another Bitcoin mining stock. Hut 8 Mining was one that we had in here, and my prediction for this one, with my calculations, is that this stock could move to $19 for one share. So with that in mind, what we did is we were agreeing to buy it at the $10 strike, and we received a very nice premium, actually, right? We received $1.60 or $160 for agreeing to buy 100 shares at $10. So this one, let's have a look at it. So we can see we've agreed to buy it down here. It's all the way up at $14.52. So there's another winning trade just on fire here. We'll make a 14.3% return for 53 days, provided it stays above $10. So that one looking really good also. Cliffs, let's have a look at this one. Now, this one has moved down a little bit. What we've done is we've done a collar trade here, where we bought the stock, sold the out-of-the-money 25 strike call, and then we bought insurance as well at the 20 strike put option. So let's have a look here at CLF. Okay, so we have moved down to the 50-day moving average at 22.36. It's down about $1 from where we got into it. So nothing significant here, right? So we are still very happy with the trade. It's still looking good. It's sitting on the 50-day moving average. We're looking for a bounce from there and then to go back and test these highs here of around 26.50. But we do have insurance down here at 20 as well. So we are pretty well covered, and our break even on this one is down at 23.19. So that trade is ticking along nicely, nothing to do there. Now, another trade that we had on was SIG, Signet Jewelers. Now, let's have a look at this one. SIG, there it is. Now, we've agreed to buy this down at $80. Okay, so we've sold the 80 strike put option and just didn't give us a chance to get in. Right? I want to get in at a favorable price. Okay, very important to get in at a good price with your stocks and then cash flow them using the power of options. So what we did is we sold the 80 strike put option for $2.25. If it remains above 80, it's almost 100, so it's looking like another winning trade. We'll make a 2.8% return for 45 days, and we don't have to buy the stock, but we get to keep the income. Now, a new trade that I'm looking at for this week is UiPath, right? PATH is the symbol or the ticker. Okay, so this one here is something that I'm interested in. I think that where it is right now, so let's have a look. It has been beaten down, no doubt about that. I understand. Big move down. It's now, though, it's been using the 50-day moving average as a resistance level in a downtrend. It's now strongly broken above the 50-day moving average, and this stock is very interesting. The IPO, which was one of the largest US software IPOs in history, this sort of floated on the exchange around 70, went as high as around $98. Around $90, should I say. Went as high as 90 and then moved all the way down to around 48. So now just broken above that 50-day moving average. I think it's a very profitable company as well. And I think that where the price is right now and the fact it's broken above the 50, this could be a good opportunity to get into Path, right? So let's have a look at this one. I'll just look at some statistics here. Just briefly have a look at this. Now, a couple of things here. The cash is very good, 1.9 billion compared to just 18, almost 19 million of debt. So huge amount of cash compared to its debt. Got a lot of insiders that are involved in the company as well, right? Held by insiders, almost 24%. That's very high. So the people that work for the company believe in the company. Institutions hold almost 56% of the stock as well. But what I'm really interested in is the growth rate. So 35% growth estimates per annum for Path. So this is something that I am interested in getting into now that the price is very favorable for us. You can see that their total revenue is certainly heading in the right direction. Very nice. Yeah, looking good, right? So I'd like to get into this one, and I'm going to be a little more aggressive than what I normally would be. So I'll just put this one in here. I want to agree to buy this one at $55. So I pretty much want to buy it right now. Okay, that's sort of what I'm saying, right? So I'm going to buy this one for around $55, or I'm going to agree to buy it at $55. And how I do that is through selling a cash secured put option, which means I have the cash in my account to buy the stock if I need to. So what I'm going to do is I'm going to sell this at the money 55 strike put option for $4.40. So very nice premium here for the 17th of the 12th expiry. So one put option, $4.40. Every option controls 100 shares, so $440 is the total premium for 40 days. $4.40 divide the price we're agreeing to buy the stock for, 55, gives you an 8% return in 40 days, which is very nice. Break even, price you're agreeing to buy the stock for, minus the premium you're getting for selling the put option, $50.60. Two things can happen. path can finish above 55 come the 17th of December, or it can be below. The only two things that can happen. If it's above 55, we keep the $440 for selling one contract, and we don't have to buy the stock. End of transaction, end of trade. If it finishes below 55, we have to do what we said we were going to do and go ahead and buy the stock at 55. We still keep the money, the $440 a contract, so we buy the stock at 55 with a cost basis of $50.60. I want to own the stock anyway. I think it's a great long-term investment. The prospects for this company going forward are good, and I want to be part of it. Okay, but I want to get paid first, and I want to buy it at the price that is comfortable for me and the price that I think is good value, or even showing that it's undervalued. So that's what we're doing there. Now, Facebook will soon be called Metaverse, and the symbol or the ticker will be MRVS. This will be happening soon. So, something like Facebook that has, Metaverse, got to get used to calling it that soon, has 4,212 institutions that hold shares in this company. BlackRock, one of the biggest institutions in the world, holds $54 billion worth. Vanguard owns $63 billion worth. So it's certainly a company with a lot of institutional money flow and investment. If we have a look here at Facebook, soon to be Metaverse, we've just broken above the 50-day moving average, just got below the 200 for a little while, and now we've moved back up above the 50. I think this transition into creating the Metaverse could be something that really does push Facebook, I think, to at least 400. So, is it going to happen tomorrow? No, but that's what I'm looking at longer term. So I like the look of this company. The other thing that I like about it, just have a look at it. Where are we? Just go to summary and statistics. So we can see here a PEG ratio, price earnings growth ratio of 0.94. Anything under 1 shows the company is undervalued, or at least it shows you that the company has GARP, G-A-R-P, growth at a reasonable price. So we've certainly got GARP there. Under 1 is, that's an attractive price for this. So you're not paying too much for the forecasted earnings growth of the company, is what it means. So that's fantastic. And even this forward PE of 23. Now think about this. Facebook, soon to be Metaverse, has 4 of the top downloaded apps in the world. Right, and a whole lot of other things going on as well, and to have a PE of just 23, that is just that's phenomenal, right? Now, return on equity 32%, well-managed company. The owners are getting a return for their investment in the company. That's a good thing. Just $58 billion worth of cash there. So, if anyone can make this metaverse work, it's probably going to be Facebook, right? So, huge amount of cash, no doubt about that. Institutions love it, over 81%. Invested in it. And let's just have a look here at the analysis and the growth rate, around 21%. So double digits is very solid, and something over 20% is fantastic. So I think getting into this new area is going to be very good for Facebook, and I do like this going forward. The metaverse, right? You become an avatar, and you go in and you create this virtual world, right? Whether you're wearing the virtual reality headsets or the glasses, whatever it is, I see this growing and becoming certainly a big factor moving forward, and I think will help Facebook or Metaverse move much higher as a result. Plus, it's a very profitable company with great products and services already, huge amount of cash. There's not much to not like about it, and I think at these prices it's very attractive. So with all that said, what I would say with Facebook is I'm going to agree to buy this down at 330. Okay, so I'm going to agree to buy it down here at 330. If I do buy it there, all well and good. I want to own the stock anyway. I think it's going to 400 plus. So with that in mind, let's now have a look at the trade that we're looking at here. We're going to we're going to sell the cash secured put option, the 330 strike put option for $928 a contract for the 17th of the 12th expiry for the next 40 days. That will bring in a 2.8% return with a break even of 320.72. One of two things will happen. If it finishes above 330, we keep the $928 for every one contract you sell, one put option you sell, and you don't have to buy the stock. If it finishes below 330, you still keep the money, but you now have to buy the stock at 330 with a cost basis of 320.72. So I like that trade going forward, and that is what we're setting up there. Now, the last one that I've got here, actually, I've got two more. This one here is on Micron. MU is the symbol. Looking to get into this stock that has been hit by the chip shortage with semiconductors. But, you know, if you have a little bit of a look here at semiconductors, SMH, you can see they're really starting to take off here. So yes, there's been a shortage. Yes, that's been brought on by the pandemic, but I think companies are now starting to figure a way around this, and I think that you're going to see a lot of these companies moving up as well. It's got solid fundamentals, this company, and I believe that this is an attractive price to be getting MU now, Micron now, which is right there. So we've certainly had a fall. What I'm going to do is I'm actually going to agree to buy this down at 67.50. Okay, it's currently at 72.92. I'm going to agree to buy it at a discounted price to what it's trading at, and I'm going to be paid day one. So that would look like this. We're going to sell the 67.50 put option for $111 for one contract, 1.6% return. If it finishes above 67.50, we keep the money, we don't buy the stock. If it finishes below, we keep the money and we buy the stock at the discounted price to what it's trading at right now. Now, I showed you guys before, we did some trades on Digital Turbine. APPS is the stock or the ticker, right? Now, I still like this company going forward. We did a collar trade before. We made a 5.3% return in a month. Then we did another trade on APPX where we sold a cash secured put option and made more money again. So I've already had two good winning trades on APPS. And now that it's had a fall, I would like to agree to buy it again at a discounted price. Okay, so let's just have a look at this, put it in perspective first. APPS, so we can see it has had a pretty decent move down, right? It's gone from 93, almost $94 down to 70. So it's a pretty big move. It's sitting right at the 200. We'll see whether it holds that or not. What I'm going to do is I'm going to agree to buy it down here at 60. So after a big move down like that, agreeing to buy it down here at the 60 price point, I think would be a good price for Digital Turbine. Okay, so what we're going to do there is we are going to sell the 60 strike put option for $210 a contract, 3.1% return for 40 days, break even of 57.90, and I like the look of that one, right? So I've already made some very good money there. So all of our Bitcoin mining stocks, our option trades there are absolutely crushing it, all of them actually, and particularly CleanSpark, right? A 26.6% return for the month is fantastic. And the only other trade that I mentioned to you last week was Microsoft. Getting into Microsoft with a call debit vertical spread. We were getting into Microsoft when the stock was $329. Let's have a look and see what it is now. It's now $336. So we need it to get above 340 anytime within the next sort of 5 weeks, so plenty of time still, and I like the look of this one going forward. I think it can get above that 340. Already we've made a 25% return in 1 week, which is very nice, and we bought it for $405 for one spread. It's now worth $505. I like the look of that one, going to continue to hold. There are some members that are conservative that will just take the 25% return in a week, which is nothing wrong with that, but we're holding for now. So they're the trades that we're in, pretty much all in profitable positions and looking really good. We have done extremely well, and moving forward, we're continuing to perform, which is what it's all about. It's about learning the markets, trading what you see and not what you think, keeping the emotions out of your trade, making sure that you're getting these stocks at good prices, and you're being paid day one, just like Warren Buffett does. And this money wheel strategy that I use, I've been using for 2 decades, works extremely well. Remember that the money wheel strategy will be presented on the 23rd of November. Huge amount of people very interested in this. One of my members, Michael, who I recently, beginning of 2020, introduced this strategy to, he started with $240,000 at the beginning of 2020. Now, a year and 11 months later, he's now turned that $240,000 into 5.5 million. So this money wheel strategy, which is not just selling cash secured puts and then doing covered calls or collars, there's a little bit more to it than that, but that's a big chunk of it, but there's more to it than that. And this is how he grew his account exponentially, right? Just incredible what he's done, more than 22 times X'd his whole account. So we're going to be presenting that. Well, I'll be presenting that on the 23rd of November. You want any information on that, or you want to be included when I do present that, make sure you send an email to support@cashflowoptions.com.au and we will include you on that presentation. Very exciting, and it works extremely well. All right, well, I hope you found some use in all of that, and I will talk to you all again next week. Thank you so much for listening. I appreciate you being here on YouTube, and we'll talk to you then. Okay, my friends, my name's Sean Allison. All the best, and bye for now.